consumption modeling show you about the state of affairs in the Philippines, primarily in the metro?
Yes, Mimi, actually, I think the electricity demand basically surprised almost everyone. Can you imagine that even during the pandemic, we did have some tightness of supply just in the last couple of months? Part of this is the return of the demand to pre-COVID levels. In fact, I would say that it has already exceeded, if not for the limitation of supply last summer. The Luzon demand reached 11.6 gigawatts, but was curtailed due to the lack of supply. So I would argue that the real demand, underlying demand, is closer to 12 gigawatts, which is arguably higher than 2019's peak. So on the other hand, the supply has tightened given a couple of factors. Number one, the Malampaya curtailment or restrictions. It seems that the Malampaya decline has already started. People are expecting for Malampaya to decline starting in 2022. But for most of this year, Malampaya has been restricted around 500 plus megawatts out of the 3,000. So that's around 15 to 20%. So that's one significant factor. And then the second factor is the outage of coal plants have also markedly increased over time. The outage rates are well over 20%, which is symptomatic of the aging plants that we have. So there is definitely some supply pressures, and I would surmise, and I think this is industry conventional wisdom, that it could get very tight over the next 2, 3, 4 years. Given that projects have also been delayed due to the pandemic restrictions, so it could get very tight in the next few years, Mimi.
So what is your role now as AC Energy in the renewable space? How much of the power demand can be and will be met by renewables, realistically speaking? Because I know that we're currently at 20%, 21%, over 50% still coming from fossil fuel. And I know that the goal is to hit 35% by 2030 and 50% by 2050.
That's correct, Mimi. We're currently at around 21% share of renewable output, and DOE, we do fully support DOE's goal of getting renewables to 35% by 2030. We have been there. In 2008, renewable share of output was at 34%, except that during the last decade, it's mostly coal plants and some gas plants were added onto the system because of its reliability and cost effectiveness. But I truly believe that this is the age of renewables. This is in the next couple of decades. This is the time for renewables to really scale up given the competitiveness of the technology. Having said that, we still need to see battery storage to increase in efficiencies and decrease in cost and demonstrate that scalability to really unlock the potential of renewables. We estimate the renewable capacity that's required for us to hit the 35% goal of DOE is that we need to build around 20,000 megawatts of renewables this decade. And that assumes that most of the capacity will come from solar and wind, which have a relatively low capacity factor. Of course, we will have to continue building geothermal, hydro, and biomass to complete the portfolio mix of renewables. But that's our internal estimate, and that's what we are prepared to do. So we'll need to build roughly 2,500 megawatts of renewables every year, and that would account for roughly half of the additional capacity that will be required by the country once we go back to the growth stage post-recovery. The other half, we believe, will still have to be filled by thermal. We welcome DOE's initiative and plan to increase the RPS, the Renewable Portfolio Standard annual increment, from what it is today, which is 1% annual increment. They have plans to increase it to 2.52% by 2023, which, based on our internal computations, is just the right number to really get to that 35% renewable output by 2030, Mimi. So there's going to be a lot of investments in renewables over the next decade. I think you've seen many companies make big announcements on the renewable space. We've been early in this game, so we're really looking forward to leading this green-led recovery.
Two things, Eric, from what you said. You did say that in the last decade, there were more coal plants that went online that were added because of cost efficiency and reliability. These two things, do you think renewables can compete when it comes to reliability and cost effectiveness?
Cost effectiveness, yes, but you have to look at it as a package. So in terms of reliability, today, not yet. Right. So because it's still intermittent, it's not dispatchable. You cannot store it. You cannot dispatch it. So to be able to do that, you'll need to integrate battery storage into the renewable system. And battery storage, for that purpose, for that use, is still expensive. Battery storage, meaning, is still in the $250,000 to $300,000 per megawatt, all in capex cost. We need to see that go down to closer to $100,000 per megawatt hour for battery storage to efficiently and cost effectively complement renewables. Hopefully that will happen over the next 3 to 5 years, but frankly speaking, it's anybody's guess as to how fast or slow that will happen. But we're preparing for that eventuality.
Mm-hmm. Will AC Energy be playing a part in the battery storage space?
Absolutely, Mimi. We are about to start commercial operations of our first battery storage installation in the Philippines. We have a 40 megawatt storage project in the same compound as our 120 megawatt Alaminos solar plant. So that will be the first, effectively the first hybrid solar and storage plant in the Philippines. So it's an exciting one. We designed the battery storage to provide ancillary services to NGCP, but we believe that it's going to take time before we can get potentially a service contract, an ancillary contract for that. That's why we're also calling for the implementation of the reserve market to really encourage more investments in the battery storage technology, as well as to complement the scaling up and the variability of renewables. Because right now, Mimi, we do not have a reserve market yet. We took the risk in terms of building the battery storage first, and then hope that we can work out with NGCP to get an ancillary service contract. Because as I said, in and of itself, it's not economic yet unless you provide a battery as a grid service. Then it is competitive and economical, but not as a complementary to storing the solar during the day and releasing it at night. Those are different economics, and that's why I think we really need a reserve market.
So the reserve market, and there's another program by government. It's the Green Energy Auction Program. The government is holding one next month.
Yes.
Essentially, power generators, you guys will be bidding through an auction, and whoever has the lowest tariff will qualify to sell their output. You're saying the rules should be stringent but reasonable. What do you mean by stringent and reasonable? What are you seeing today? And why are you saying they need to be stringent and reasonable?
Well, it's what we've seen in other markets and in the draft rules as well, Mimi. I think what we've seen in other markets is if the rules are if it's too easy to participate, we see eventualities of not so serious bidders or bidders with weak balance sheets, the so-called flippers who enter these auctions. And if the penalties are not that meaningful, it's easy for them to bid aggressively, pay a little bit of penalty. If they don't push through with the project, they'll try to sell it to a bigger investor. But as a result, we've seen a lot of auctions fail. Whether it's India in the old days or even Australia, a lot of projects do not push through because of hyper-aggressive bidders who end up not doing the project. So I think we need to safeguard against that scenario. We've seen that all over the place, including in the Philippines in the past. So I think we need to see the rules that are tight enough but that are fair. Number one. Number two, we want some investors would need predictability as well. It's good that the government has announced 2,000 megawatts, but we need more clarity. What is the 2,000 megawatts? What technologies will it entail? And is the 2,000 megawatts just for this year? What would happen over the next multiple years? Because again, when we make investment decisions as investors, we are looking at a potential tight supply situation in the next 2, 3, 4 years. we would like to be able to help with that. But if suddenly that 2,000 megawatts becomes 5,000 megawatts or 10,000 megawatts, and that will change the equation for us who would take the market risk as well. So I think some visibility and some predictability will be helpful as well, so that we can complement whatever we think would be the supply gaps.
Exciting and a very busy season coming ahead for you guys. When you look at the business model though, Eric, where do you think in the renewable space, where do you think has the easy money been made, and where is the harder money?
Well, it's been tough already around the region. So I think the earlier you are in the rollout of any program like the feed-in tariff program, obviously the government will make it attractive enough for the early birds. So we've seen that in the Philippines feed-in tariff program for 8 years ago. I wouldn't say that it's easy money, because it is very risky what investors did, which is build the plant without the guarantee of a feed-in tariff. And some of the solar projects, if you recall, didn't make it to the feed-in tariff. So I wouldn't call that easy, but the ones who made it are making reasonable income for the risk relative to the risk that they took. And now we're seeing the benefits of that, because then with this upcoming auction, a lot of groups are already prepared to really give the best deal for the customers. We've seen that in Vietnam as well, with really a booming of the solar and wind projects with an attractive feed-in tariff program by the government. So I think you've seen that all around. But as markets evolve to a more competitive approach, then the margins you see are expected to decline. But we can afford that squeezing of the margins because of the good news being that the cost of capital remains low, but I guess it will not remain low forever. That's why we have to safeguard against hyper aggressiveness, especially if there are projects that cannot lock in this low cost of capital over the longer term. What we don't want is aggressive behavior today, thinking that this low cost, low interest environment will stay for the next 10 to 20 years. And guess what will happen once the loans get repriced 5+ years down the road. So we need to be careful with that as well, Mimi.
We don't want to be left holding the bag.
Exactly.
Speaking of capital, Eric, on top of the $400 million senior green bonds that you're listing in Singapore, will you be needing any more funds to raise?
Well, right now, Mimi, we're focused on deploying all that capital as of the last...
That's a lot.
As of the last reporting period in June of this year, we had $800 million of cash in our balance sheet. And then in addition, we just raised a $400 million fixed for life green bond. So if you do the math, that's we now have well over $1 billion. There's a lot of opportunity. As you know, we have a very aggressive target of reaching 5,000 megawatts of renewables by 2025. We're currently at 2,100, but we do expect to reach the halfway mark soon, especially given the recent announcements of the board approvals for a couple of projects that we have in the Philippines and outside of the Philippines. So we're feeling confident that we are on track in terms of meeting or exceeding the 5,000 megawatts of renewables by 2025. And we're basically comfortably funded already, given the cash that we have in our balance sheet and the recycling of capital from the earnings that we have in our existing and future projects. So we're focusing on accelerating the expansion. I mean, it's truly an exciting time, and we'll be there at the forefront of this energy transition.
And we will be watching. I'm very curious, Eric, you're currently present in the Philippines, Australia, Indonesia, Vietnam, and India. Are you looking at new geographies?
Yes, we're always on the lookout. Mimi, our key priority now is to scale up and strengthen our presence in these existing markets. There's a lot to be done in markets like Vietnam and Australia. Indonesia is a boom waiting to happen. We're waiting for a firm and clear government policy, but there is huge opportunity in Indonesia, but we haven't realized that yet. But of course, we continue to work with various partners. We've announced a couple of new partnerships in the last couple of months with Nefin, with IB Vogue. So these are multi-geography partners as well, similar to the existing partners that we have, particularly UPC and the Blue Circle. So we continue to work with partners to take us to new markets and will remain open to those possibilities.
Okay, on that note, Eric, thank you so much for joining us and for the insights this morning. Do keep safe. We're looking forward to speaking with you once you hit more milestones down the road.
Absolutely. You too, Mimi. Thank you so much.